To say no big bang opening, just building on to its gains in a slow and steady way.
This morning, things are on the quieter side. The Nifty is trading in a range of just about 50 to 60 points.
The markets are concerned slightly off the highs of the day, but still sitting with gains. That is, the Nifty is up 60 points right now.
The Nifty slipped close to about 100 points from the day's high. The high today was closer to 17,700, and now look at the slide that's taken place in the last 1.5 hours. The Nifty is holding above 17,600 with a gain, but a very minor gain, just up close to about 0.1%.
It was a day where we saw some gains, and thereafter those gains were paired. At the end of the day, the Nifty ended mildly higher, dragged lower by the Nifty Bank, supported by the IT index. But what did extremely well were the mid-caps. That index up by almost 0.5%. Hello and welcome. You're watching us here on Markets Today, a show where we track about 6 hours of day's trading action in 5 headlines. Let's talk about those headlines then. Indian indices gained for the 6th straight day, making it the longest gaining streak in 4 months. The Nifty Bank slips, snapping a 7-day gaining streak. Financials underperformed. Meanwhile, BSE companies gain a market cap of almost 70,000 crore rupees. City gas distributors lower prices after the central government revises domestic gas pricing guidelines. Distributing companies see buying as the street cheers more given the annual escalation clause and the Kirit Parikh's panel recommendations. Strong JLR sales growth for the 4th quarter along with a healthy order book propels Tata Motors 5% higher. Expectations of closing the year with strong positive cash flows also supports the stock. Godrej Properties and Soba, all the real estate stocks, do extremely well in today's trading session on strong updates for the 4th quarter. Strong bookings and rising collections. Other constituents of the realty index too clock gains. Private equity investors continue to bet big on the healthcare space in India. Temasek buys 59% stake in Manipal Hospitals, valuing it at $5 billion, which is the largest PE deal in the sector. So let's tell you what we have lined up for you in the show today. In Market Opinion, we have Venugopal Ghare of Bernstein, Tahir Bacha of Invesco Mutual Fund as well. In Corporate Voices, we have Dhaval Ajmera, the Director of Ajmera Realty and Infra India. But before we get to all of that, let's take a look at today's market action. The Sensex as well as the Nifty gained for the 6th day in a row, making its longest winning streak in 4 months. However, the gains were limited as financial stocks underperformed. The Nifty Bank ended over 0.5% lower, snapping its 7-day gaining streak and continuing its underperformance as against the Nifty itself. The mid-caps, however, for the 2nd day running fared better than the blue chips, and we saw a bigger gain. Perhaps the fact that we are in a range right now, no real worries for the large cap index, the frontline indices, and strong support at 17,500 for the Nifty is what's propelling the rally in the mid-cap end of things. Sonia Shenoy joins in with further details. Sonia.
Well, thanks a lot for that. Today was entirely a day of consolidation. Not too much action on the headline index. The Nifty consolidated with minor gains. The Bank Nifty, in fact, was under a bit of pressure, so it was down about 0.5%. IndusInd Bank, ICICI Bank, Axis Bank were a tad bit soft today. Nothing alarming. But on the upside, a lot of companies, after coming out with their Q4 business updates, surged in trade. Titan was up about 1%. Tata Motors was the star of the show, up about 5% after strong JLR numbers in Q4. L&T hit a fresh 52-week high today as well. Another pocket that suffered a bit today was FMCG. So you had Nestle, Britannia, HUL that were all under pressure. And the other sector, if you're looking at one, is technology. All eyes will be on names like TCS and Infosys that come out with numbers on the 12th and 13th of April. Going forward, and those stocks will definitely be in focus as well. But otherwise, it was a day of complete consolidation. The market just holding on to its gains of last week, ending around that 17,630 level.
All right, let's get you some market opinion then. Thank you for that, Sonia. Venugopal Ghare of Bernstein says that the India market is currently in the midst of a bear market. Meanwhile, Tahir Bacha says that the Indian market is affected due to the US banking crisis. Amidst all of this, what should one do? Listen in.
If you were to see the last 18 to 20 months, India has been broadly flatlining, pretty much in a range-bound sort of a market. And in somewhere down the line, you can call it a bearish sort of a market, even from a global perspective. And you tend to see bear market rallies from time to time, these sort of rebounds and then, sell-offs, which is quite common if you look at the past 18 months as well. Normally, we tend to ignore, quite a few of these bear market rallies if they're pure valuation led. I guess the reason why we decided to call rebound this time was largely because it was not just pure valuations. I guess our perspective was more led by the fact that we were also seeing macro bottom out.
There has been a one negative development from a global standpoint, which is around US, centered around US banks and the repercussions thereof. And then there is a good development over the weekend that, at least for some reason, the RBI has chosen to pause, and that takes away some bit of the multiple pressure on the market, pressure on multiples rather, on the market.
Right, with that we move on to the second headline now. City gas distributors lowered their prices after the central government revised domestic gas pricing guidelines. Distributing companies will also see some buying, as the street has cheered the move given the annual escalation clause in the Kirit Parikh panel's recommendations has been included. So got a decent move on both Mahanagar Gas as well as IGL along with GAIL. But importantly, remember, these moves come on the back of big moves already in the previous two trading sessions, as this was expected by the street.
The APM prices recommendations that we had made were following that it should be fixed within a floor and a ceiling price, and that is accepted by the government. The same floor and ceiling we had suggested, $4 per million BTU and $6.5 per million BTU. I think the consumers will are getting cheaper price for the PNG and CNG supplies. Second measure the government has taken is that it has provided 20% additional money or price increase for gas that is produced by ONGC and OIL.
Let's also get in Sonal on this one. Sonal, how will the formula work?
Well, yes, this has come as a material relief to the gas users, as the government has accepted Kirit Parikh committee recommendations and has amended as to why gas is and how gas is priced in the country. So let's understand some basics first. India consumes around 150 to 160 MMSCMD of gas totally, out of which 50% or 80 MMSCMD is produced in the country and rest is imported. Out of this, 77 to 78% is the gas under APM or administered price mechanism, and rest is non-APM. Out of the total production, 83% is produced by ONGC and Oil India combined, and rest is basically private players or JVs. So the change that has come about is in the APM gas pricing. Let's first talk about what was the gas pricing scenario earlier. APM gas prices, they were basically decided on basis of a formula, which is the weighted average price of 4 global benchmarks, that is US Henry Hub, Canada-based Alberta gas, the UK-based NBP and Russian gas. It was revised every 6 months and it was set at $8.57 per MMBTU as per the last revision. Now there has been a change to that. Gas prices will now be announced every 1 month. The prices will be pegged at 10% of international price of Indian crude basket, and to protect the interest of consumers, there is a ceiling to this. The gas prices, that is $6.50 per MMBTU, and the floor is at $4 per MMBTU, which is for the benefit of producers. Now it's important to note that ceiling will be maintained for FY24 and FY25, post which this will see an addition of $0.25 per MMBTU every year. Gas from non-nomination blocks of oil and ONGC will have 20% premium to APM prices, and there is no change in pricing regime for difficult fields or any LP blocks. Now this change was brought about because of the way gas prices moved during the Russia-Ukraine war, as the global supply of gas was impacted. This led to prices in Europe going up by 3 times, prices in the US touching new highs of $9 per MMBTU. This led to higher prices in India as well, and that is the reason why CNG prices in our own country and city shot up by 80%. So that is the kind of move that we saw in 2022 as well. Now let's move on. After talking about how CNG and PNG prices went up, that was the reason why the government went ahead and set up the Kirit Parikh committee. But with the new pricing regime change that has come in from here, we will see that the prices have been set at $9.16, that is April 1st to 7th. Post that it is at $7.92 per MMBTU. But again, the ceiling is at $6.50 per MMBTU. This has come in as a big relief to city gas distribution companies. IGL gets around 80% volumes from CNG and PNG segment, MGL at 87% and Gujarat Gas at 36%. So the first two tend to benefit the most. As a result of all this, there have been massive price cuts by all the players. MGL has cut CNG prices by 8 rupees, PNG by 5 rupees. We have seen Adani Total Gas cutting CNG prices by 8 rupees, PNG prices by 5 rupees. There's IGL which has cut prices by 6 rupees. GAIL Gas has cut prices by 6 to 7 rupees per kg, and this has come as a relief to consumers as well. But for producers like ONGC and Oil India, in the near term, there will be a hit to their realizations, with both of them seeing cuts of around 24% as for brokerages. But of course, in the longer term, it's a positive because of the floor. Brokerages are positive on the entire city gas distribution space. Jefferies has upgraded the EBITDA estimates by 6 to 20% for all the three companies. For GAIL, it will lead to a savings of 1100 crore rupees for LPG segment due to lower gas costs. Morgan Stanley says that not only city gas distribution companies, new pricing mechanism is a positive for producers as well and removes a multi-decade overhang on long-term returns. And CLSA says despite the price cuts, margins will be positive for MGL and IGL, and this takes discount of CNG versus diesel back to 30% and brings back the pricing power. Government's intent to assure $75 to $80 barrel realization also raises earnings predictability for ONGC and Oil India.
All right, Sonal, thanks a lot for that, for explaining how this formula would impact and benefit all the city gas distribution companies. We've seen a big move in the last three trading sessions in all these names, and perhaps more is warranted as per the brokerages. Let's move on to the third big headline of the day, and it was Tata Motors. Both Tata Motors and Tata Motors DVR gained almost 5 to 6% today after JLR posted strong sales growth for the fourth quarter. Meanwhile, Maruti Suzuki was also in the spotlight after Goldman Sachs downgraded the stock, as a result of which, as you can see, Tata Motors, while it was up 5.5%, Maruti was up just by 0.22%. Sonia Shenoy joins in with the details.
Tata Motors is on our radar as the company reported very strong JLR numbers in the quarter gone by. The wholesale numbers were quite strong as well. So overall global sales numbers went up 8%. Within that, the passenger vehicle numbers went up 10%. But Jaguar Land Rover's numbers were exceptionally good on a quarter-on-quarter basis. It was almost a 20% rise that JLR has seen. Now, Goldman Sachs upgraded Tata Motors to a buy from a neutral to factor in the improving JLR outlook. They also said that the valuations are looking very good compared to Tata Motors' own historical valuations of 9 times. Forward, Goldman Sachs said that Tata Motors is now trading at 7.5 times. So there is some valuation upside as well. BofA Securities said that not only are the volumes good, but there's a free cash flow beat at Jaguar Land Rover as well, and the risk reward is favorable at current levels. So that's on Tata Motors. The other stock in focus is Maruti, because Goldman Sachs has downgraded Maruti to a neutral from a buy, and they have reduced their target price to 8,800 from 11,000 earlier. They say that there is persistent weakness in demand, especially in the small car segment, and the commentary is weak from the management, perhaps because of the supply side issues as well. The dealer checks indicate that the inventory levels in the small car segment are 2 times the normal channel inventory. So that seems to be a bit of a sticky point. Remember, 35% of Maruti's product portfolio comes from the small car segment itself. Not only that, the Urban Cruiser, the S-Cross are a couple of brands that have been discontinued, so there will be that impact too. So all in all, these two stocks were in focus today.
All right, Sonia, thanks a lot for that. It's time now for our special segment, Fin Street, where credit cards are in focus today, and the question that we're getting answer to: why have credit card spends dipped massively in February? Abhishek joins in to explain just that.
While credit card spends have declined massively in Feb on a month-on-month basis, the card issuances has remained healthy on a month-on-month basis. The decline in spends is on expected line, with a decline in rental payments believed to be a key culprit, as paying rents via credit card now attracts a charge. Let's now take a broader look as to how February has panned out for the credit card sector. Total credit card issued is up 16.3% YOY and about 1.11% on a month-on-month basis. This compares to about 17.5% YOY and about 1.6% month-on-month growth that you saw in Jan 2023. Total spends are up nearly 38% YOY in Feb 2023 versus 45.5% growth that you saw in Jan of 2023. Now, total spends are down 7% month-on-month in Feb 2023 versus a growth of 0.91% month-on-month that you had in Jan 2023. If you compare Feb 2023 and Feb 2022, the spends per card is down 8.1% month-on-month in Feb of this year versus a decline of 4% that you had in Feb of last year. Total card issued is up 1.11% in Feb of this year versus 2.1% growth month-on-month that you had in Feb 2022. So total spends is down more than 7% month-on-month in Feb of this year versus a decline of just 2% in Feb of last year. So clearly, February saw a decline in spends month-on-month in both the years, but the decline is sharper this year. Let's take a look in terms of the top 4 performance. In terms of card issuances, their market share has declined sharply from more than 73% in Feb of last year to right now about 68%. SDFC Bank, ICICI Bank and Axis Bank have lost market share YOY. SBI is the only player to gain market share in terms of card issuances amongst the top 4 on a YOY basis. So in terms of spends, the market share of the top 4 has declined from 73.75% in Feb of last year to right now a little under 72% in Feb of this year. SDFC Bank is the only player among the top 4 to gain market share in spends YOY, that is year on year. SDFC Bank has gained about 193 basis points in terms of market share in spends. This compares to a decline of 358 basis points for ICICI Bank, 20 basis points for SBI and flat for Axis Bank. Let's take a look in terms of per card spends. YOY, the per card spend is up 18.6%. 18 lenders have seen growth rate being better than industry average. Now, players who saw spends doubling or more are CSB Bank, Bank of Maharashtra, Canara Bank, City Union Bank and Bank of India. 15 players saw their spends below industry growth rate, with SBM Bank India and IDFC Bank losing the most. Month on month, industry level, the spends declined by 8.1%. So top losers in spends per card on a month-on-month basis are City Union Bank, CSB Bank, DBS Bank India, Federal Bank, HSBC, Axis Bank and SBI Card. So the key takeaway and outlook. Spends have declined in Feb 2023. Now this may have been led by RBI ruling charges on rents being paid via credit card. Expect the trends in spends to remain soft in the coming months as well. Card issuances have remained healthy and the momentum is expected to sustain. The top 4 are losing market share. This is a big surprise. Consolidation is happening in the sector. Axis Bank's numbers will improve due to Citi acquisition, which will help the market share of top 4 players in the coming months. Now, Bank of Baroda and IndusInd Bank will likely move up the ranks with Citi moving out. Also, credit card spends may get a hit by the recent RBI announcement of pre-sanctioned credit lines by banks via UPI.
All right, Abhishek, thank you for explaining this to us, why credit card spends have been lower in February. But with that, it's time now to take our first short break. As we do that, you just stay tuned because we'll be back in a jiffy with all the other headlines that we are tracking today.